Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Monday, November 28th. Well, look at this. We only have a couple more days of November, and we're on to the last month of 2022. Just like that, we're going to be getting through of 2022 very quickly, right? One more month to go. I'm saying that even though we've got 2 more trading days to go. We'll talk about those those last 2 trading days of the month. Clearly, we might get some volatility that last trading day of the month. So before we get into any of that in today's themes, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for education purposes only. So clearly volatility was on the rise today. We've got, a couple stories going on in terms of China lockdowns, and that seems to be a mess. We've got some complications there with Apple as well. That was another headline for the day. We've got more mess in the crypto space. We've got another company announcing bankruptcy. It just seems to be getting worse rather than better in that space. And then don't forget, we've got Powell coming up on Wednesday. Big speech for Powell. We did hear from some Fed governors today. We heard from them last week too, various different Fed speakers, and it just didn't really bring anything that was too alarming. Today was a little bit different. The market seemed to be more sensitive to headline risk today and to what the Fed speakers were doing. We heard from those a couple Fed speakers who were fairly hawkish midday, and the market was already heading down for the day and was already a bit weak, and that kind of just kicked the indices over for the day. And that was basically the kind of day that we had today. Poor breadth. Overall, that was something that we kind of saw in the beginning of the day, that breadth was kind of mixed, and it just kind of got worse and worse as the day progressed. A little bit better, small bounce at the end of the day, but here's the raw numbers, just so that you could see. Obviously, we have an indicator that looks at up volume versus down volume of declining, advancing names, and it associates a number value to that, which helps a lot to see how extreme it is for the day. But if you want to see the actual movers, you could see that they're in the Dow. There's 25 decliners, 5 advancers. S&P 466 decliners versus 37 advancers, and the Nasdaq 2158 versus 684. So pretty ugly. So a couple takeaways from this. We really haven't seen a decent down day like this, I think, in a couple weeks. I want to say, I didn't go back and look to see, but it just feels like we haven't had that in a while. So that is interesting to see if that's going to be the start of something. And number 2, I would say, one day is not a trend, so keep that in mind. So we might find some hints in the technicals. One other thing before I get over to the technicals, just looking at the averages, the worst of the day was the micro caps, right? The small caps have been kind of absent for the most of the month. The small caps were down 2%. They led lower. Today, they've been kind of meandering around the 200-day moving average. We'll kind of go to that chart first, right? Back and forth, got a little bit above here, found some support of the 20-day moving average, went back up to the 200-day moving average and seems to get rejected again, but back into a test of the 200-day. So this will be interesting. I do think, as we close out the month of November, one of the things that I would be looking for December is whether or not we're going to see some participation in the small caps, or if they're going to break the 20, right, and start to kind of head back. And you can see we've got a new developing value area, which we will we're actually going to have a webinar probably Thursday night for TTG members, talking about volume at price and how to use the market webs, how to trade with the market webs. But that'll be Thursday night for members. But yeah, I mean, that's something, it's very difficult to make a clear conclusion at this point. I would rather wait until, we do see a definitive break of the 20-day moving average. And if that happens, then we've got an air pocket and maybe we see this. And overall, I don't think that that'll be a great sign for the market. So the small caps may provide some hints. Right now, they are doing basically what we've seen for a good couple of weeks, which is underperform the rest of the market, right? And again, microcaps were down more than those small caps. So let's talk about the S&P for a minute, because you're going to hear a million people talk about, listen, not a million people, but I'm being dramatic, but you're going to hear a lot of people talk about, hey, this is another rejection of the 200-day moving average. Okay, that's fair. This is where we got, the highest point that we got in August was the 200-day moving average. So yeah, I'm worried about that myself, and what we're going to see here. But keep in mind, we're basically just back into this range that we were in. So yes, we will eventually, like if this is going to eventually at some point turn into something other than a bear market rally, we're going to see the 200-day moving average have to be retaken. Now, let's talk a little bit about the downside. So we have the 20-day moving average down here. So I'm not really, I'm not jumping to conclusions here, because it's the first attempt back at the 200-day moving average. I think where we've been over the last couple of weeks, we've seen a pretty strong market. So I'm not surprised that we're getting rejected on the first attempt. What I think is kind of interesting here is this week's value area, which will also give us a clue. We came down to the bottom of value in the last hour, and we held it at 3964. This was something that I tweeted out earlier today. So, we did break this 200-period moving average. Again, not a good thing. This is a negative thing, right? We actually held in here pretty nicely last week. We kind of bounced off this 200-period moving average. It does a good job at showing you the trend on a smaller time frame. So I like to kind of look at the smaller time frame, because I think first of all, I do a lot of short-term trading, and so it makes sense to look at multiple time frames. But sometimes a signal or a trend change will reveal itself first on the 1-hour chart before before you see it on the daily chart. So yeah, I'm watching this 3964, and who knows, this could be broken in the after hours market. We just kind of have to wait and see what happens here at 3964. Again, why is that significant? Well, we're using volume at price. Again, this was all the volume and price activity from last week, right? And we're taking a statistical representation of that, just about one standard deviation of that activity, and we're drawing it forward, right? And it becomes significant. And you can see we held here for now 3964. So ultimately we'll need to, if we do bounce from here, we're going to need to retake at least this 200-period moving average, and then kind of come back up. Now again, why I'm not like, I am worried about getting rejected at the 200-day moving average, but I'm not, making the conclusion that that's the end of the move that we've seen over the last, couple of weeks. I think that we could see more digestion. Let me point you to another chart that you've heard me talk about in these videos, which is the diamonds, right? It was the same thing. And I joked around a lot about this, because the first, once we got to the 200-day moving average, and yes, it was a rejection. I mean, look at this candle, right? That happened on this day, where we try to go higher, and then we closed back below the 200-day moving average. And then we broke again, another day lower, and you had everybody saying the same thing, the 200-day moving average and the Dow, what a great signal. And, but I think the object here is to stay open to all possible outcomes, because we didn't stay down for long, right? And it was one of those signals that, it kind of trapped people a little bit, because people were making that conclusion all over the place. Right around that time, I saw a lot of technicians, put the chart out of the Dow saying, hey, we got rejected. It's a lower high, game over. Right. And then look at what is ensued after that, a pretty nice rally. And again, not to say that we can't come back and back check, the 20-day or the 200-day moving average again, but, stay open to all outcomes here. All right. Another thing is too, let's take a look at where some other things were at. The last time that we really started to make this move lower, again, what was the time frame here? It was the middle of August, right? Until basically for 2 months. we headed down, right? We had a little bit of a rally, here and there, but for 2 months, we basically headed back down and we tested the lows. Our interest rates and the US dollar, let's talk about that period between August 15th and October 15th, right? So let's bring up the US dollar, right? Going back to 815, right? Notice what happened here, right? This was 928. Now we made a couple other attempts, but 1015, the US dollar started to break down, right? So the dollar was stronger. So it was coinciding, it was confirming with that move lower in equities, right? What do you have since then? Right? You actually have the dollar breaking down. Now, something that we'll have to watch is the dollar was super strong today. It started lower and it ended positive. This was a strong move today. So if we see this make another second attempt, right, and come back up to the 50-day moving average, right, then I agree. I think there's going to be more volatility in the equity market. That would be risk off. And then we'll have to see what happens once we come up to that 50-day moving average, right? So we could have a double bottom here setting up. But for now, we're not, so again, this is just a potential setup. Really, you can't say that this is a double bottom until we get over here. So the next couple of days are going to be important for what happens. But right now, this looks different, right, to me than where we were. And we'll have to see if a rally starts to unfold here in the dollar again. What about bonds, right? So take a look at what happened here around 815 to 1015. Right, we saw this massive move down in bond prices, and of course higher yields. When this is going down, it's inverse relationship to what yields are doing. Yields do the opposite, and of course you can look at TNX for the same thing, but yields were ripping higher. Right, the 10-year Treasury index really started to move higher. So again, this is interest rates, even though interest rates are not in the column, but just as representative here. And then on 1015, right, yields started to come back lower. So we're at this point now, so the question is, right, for us to really get rejected and then start to go lower, I think that you're going to, things are probably going to confirm one another with a stronger dollar. As well as rates turning back higher. So we don't really have that yet. That's something that we're going to need to keep an eye on. Again, keep focused on, some other areas, because they will give you hints. The US dollar, what the dollar does and what rates do is extremely important for what equities do. So that's how I kind of will help determine, but of all else, I'll be watching what the price action is going to tell me, right in here around the 20-day moving average. And of course, the level that I mentioned on the 1 hour chart, which is 39.64. Okay, so that gives you a little bit of a plan, more than I think, oh geez, 200-day moving average, we rejected it and it's game over. We're going to go back, we're going to go back much lower, right? There's many different possibilities from here. In the short term, what I think and what I did a little bit too is just kind of, took off a couple trades. I wasn't really super long into, coming into this week. I had already taken off some trades last week. I was selling into strength, trying not to add too much risk. Still, I'm going to try different trades here and there, but I think overall, you do want to make sure that the market is headed in the right direction. Another thing that we're gonna see how it shapes up today is the McClellan oscillator, which isn't out yet, but we still have a bullish crossover there. We want to be mindful when we see a bearish crossover there. All right, a few other, we really didn't get into too many single stocks. Let me just bring up the trades channel in here. Excuse me, I really didn't do too much trading. I started a cut, this is in the beginning of the day. I'm always starting a starters. Wing did not work. There's a lot of fake outs today. This was a name that actually finished at 152, right? But this is what's going to happen sometimes, right? In the beginning of the day, first 15 minutes, I'm always all about a starter position. I'm never putting on any major risk. Once we started to see that things were kind of turning around, I got out of that trade, hit my stop price. Halo worked really well. This was a trade that I put on from last week. I just decided, because the market looked a little bit too shaky for me, hey, I've got some nice profits, I'm going to take them, especially in a small cap biotech right now, right? Because if you look at biotech, and again, we start with the ETF in the space, right? That is another thing that I would want to see in December, is for biotech to begin to trend again, right? It's had a really tough time with this 200-day moving average. Again, it keeps getting rejected. Notice that it really hasn't fallen off too many times, but here was the rejection of 200-day moving average. Here again, and a few times like in the last few days too. So again, it's not really moving far down, right? And that's a possible outcome that you could see with the S&P, is that it just kind of hangs around here. But bottom line is, I would like to see this start to get moving back to the upside, and yes, definitely back above the 200-day moving average. So that's not there yet. And right now, you had a down 1.7% day for this. So one of the reasons why I just decided to take this Halo trade off. I tried I kept on seeing Tesla calls hit the tape, but again, if it's just too difficult, and that's how this market was today. I wanted to see Tesla, and again, this was just a day trade, right? I don't really swing trades many things that are in downtrends. If I do, it's always a smaller position, but this got above the 200 period moving average. It is still above value for the week. So I was thinking that maybe this thing could rally up to 193, but again, it's very noisy. Whenever Elon seems to be talking about Twitter, whatever it is, Tesla seems to go down, because that seems to be where his attention is on, and the market just doesn't seem to like that, regardless of how much call buying there is on the tape. A couple other things I just decided to duck out of. Taiwan Semi was a name that I had tried, and I took one target in this trade, but it's kind of leaning lower. And this is not a name, speaking of a name that's not in an uptrend. I know Warren Buffett, went long into this position. Obviously, Mr. Buffett has a different time frame than I do. Ducking back below the 5-period moving average. Was looking for this thing to resolve higher and take out 86. It may do that, but the first signal is lower, and a move below the 5-day moving average. I got rid of that position. Again, having to make, that's what this market is about right now. And that's what it's been about all year long, is sometimes you just have to make some difficult decisions. Starbucks too, very close to where I bought the name last week. It just really didn't have any major momentum to it. I think I had this trade on for a few days, and it just didn't do anything. So I got out of that again after taking one small target last week. A couple, starters. I've been doing this with this AEHR. Anytime it's been down a decent clip, I like how it hung in there today. So at one point it was down 5%. Right, you could see the move into this week's value area, but it came back. If it breaks the lows for today, I'll be out of it. But this has worked for me a couple times, where I've decided to kind of just get involved in a starter position when the market's weak, when the name's down a little bit, and it's worked a couple times. It's rebounded nicely. And then this was a setup from this weekend. FICO, again, tough to kind of take a trade at the end of the day today, but I hate doing the work and then getting a signal and not taking it. So it just barely did close above 586. And I'm looking for a move, basically a short-term move up to 607. Again, it closed right above that value area, thin value area for the week, high price stock. So that's what I'm looking for. DXEM, we could look at this name. Unfortunately, it's just back in digestion. First, another rejection in the beginning of the day, didn't close above the value area. But again, just sitting back here, I decided to keep this position on. Really, if it starts to break below this 20-day moving average and break below last week's lows, I'll be out of the trade. But for now, giving this a chance to see if it resolves higher. Clearly, there must be some type of a seller in this, because it's happened a couple times now. While while it is tried to turn higher, it's gotten rejected. So perhaps the seller just needs to kind of finish up. So for now, patient, but if it really breaks below this, 110 area, I'm out of the trade. All right, guys, that is it. Again, one day is not a trend. I say that on a lot of times when the market moves up. Just to look at the calendar, right? Just so that you know that what we're dealing with this week. Whoops, wrong calendar. So not much there wasn't much for today. Tomorrow, we've got some home data, right? Prices. We've got consumer confidence that comes out at 10 o'clock. That's for tomorrow. And then really, we're going to get a lot of information that comes out in the next couple of days. Right, we're going to get the Powell speech on Wednesday, which I think is around 12 or 1 o'clock. You'll see in just a second when I bring that screen up. And then we also get another gauge of inflation, the PCE deflator, that comes on the 1st. Now, granted, we're going to get GDP, and that's fun to talk about at cocktail parties for some, but it's really not going to move the markets that much because it's a lagging indicator, right? If you've ever taken economics like macroeconomics 101, you know that GDP is a lagging indicator where things like, inflation data and, more things like PMI data, ISM data, those are more leading indicators for the economy, but also know that stock prices are more of a leading indicator too. But nevertheless, PCE deflator, that will be an important number. That'll be after Powell speaks, the day after. That'll be the 1st of the month. And right, here's a couple of the Fed speakers that we had. It will be 1:30 on Wednesday is when Powell will speak. All right, guys, that's it for today's video. Have a great night. See you tomorrow.